this is Mike Moshek, Cadwalader. Thanks for dialing in to Fund Finance Friday Industry Conversations. Excited to have with me my buddy and fellow board member of the FFA, Jeff Meyer, here with me this week. Jeff, how you doing?
Hey, Mike, it's good to see you. I see you got a few more grays on that beard.
I diet gray to look mature.
Well, it's working.
Yeah, well, hadn't seen you in a while, but I felt like I have. I saw your episode of Fund Fanatics last week. That seemed fun.
Yeah, Scott and I are having a really good time with that. It was an idea we came up with, and we just decided to go for it. We put it out there on LinkedIn. Seems like folks liked it, and we want to keep it rolling. We had a guest speaker come in. We want to keep the guest Fund Fanatics coming. Maybe, who knows, maybe you'll be a fun fanatic one of these days.
That'd be fun. I like it. I like content-based marketing, but I also like not taking ourselves too seriously. And so I like the mix you guys have on your clubs.
Yeah, we like to mix in a little private equity, but a little bit of sports too, or maybe more sports than private equity. But Scott is the football guru. I'm an avid collector of sports cards myself, so we have fun with it.
Yeah. Well, I want to ask you a little bit about management fee facilities. I know that's a space you've been active in. How is demand in that area?
Yeah, no, we see, even through COVID, we still see quite a bit of requests for management company facilities. Typically, it's a revolving line of credit. You can do term debt. You can sort of get creative with them, but they're based on the cash flows of the management company.
And what about the deal structures? What are you seeing in the market?
Yeah, there's not a lot of banks actually lend to management companies based on the cash flows of the management company themselves. And so, and the facilities can be small from time to time. We'll easily do a $500,000 revolver to a management company that can help bridge the manager between quarters. The receipt of management fees and the expenses of running a fund, of running a management company, don't always line up, especially in the first quarter if you pay employee bonuses. And so these revolvers can be very, very helpful for bridging between quarters and bridging between the receipt of management fees and your outlays.
And what about post-COVID? Have you seen any change in the use of loan proceeds by the sponsors?
We have seen some longer tenured requests. I think folks are thinking sort of long-term, more strategically. They wanted to see if maybe we could do some term debt to the management company. These would be some bigger managers that are managing multiple funds or have multiple different products and strategies under management. And so, they're seeing the opportunities in the market to potentially acquire another team. And is there a way to finance that through the cash flows of the management company? A lot of folks forget that the management company in and of itself is an operating business that's very much a creditworthy business.
Yeah. Well, and what about the GP facility market? How active is that market right now?
That market has been very active. There's been a lot of requests, and I think there's been a slow up and I'm sure you've seen this in the data and the numbers. There's been a slow up in exits. There's been a slow up in distributions. Deal flow is down, roughly 20% if you compare the first 3 quarters of this year to last year. And so, there hasn't been a lot of exits. There hasn't been a lot of carry events. And if you need to make a commitment to a new fund, no better way to do it than to finance a portion of it.
Yeah. So switching gears a little bit and looking at the fourth quarter and into 2021, do you continue to forecast growth here, including the subscription markets?
We do. I'm positive. I'm an optimist by nature. We've been very fortunate, very blessed. We've had a portfolio of clients, and that portfolio of clients has kept us very busy. I do think you're not seeing as many new managers come to market, and so what would be called a new opportunity is a bit muted. But, because we have an existing portfolio and a lot of folks have doubled down on their existing relationships, it's given us a lot of deal flow, a lot of opportunities.
Yeah. Well, switching up with you a little bit, I was really happy to see Alexis Schultz on your team get so involved with the Next Gen initiative of the FFA. They had an event this week and have been really, really active. And I know she's been working hard. You've got a really good team.
Yeah, I couldn't be more proud of Alexa and the whole team in general. When Scott and I first started this thing, it was just the two of us, and we've quickly grown to about 14 team members. And we've gotten very, very fortunate to have excellent producers, excellent rock stars like Alexa. And couldn't be more than ecstatic with her involvement with the FFA and with the Next Gen initiative. I know she's been a leader for them, and I'm very proud of the work that she's been doing.
Yeah, that's great. Well, it's really good growth your team has had too. You guys got to be excited about that.
Yeah, we want to keep it. We want to keep it up. We want to keep the momentum going. I know, the future is a little bit unsettled and a little murky. Hopefully, everyone comes through this COVID. We get the election behind us. Hopefully, vaccines are on the horizon, and the private capital markets. I will say, Mike, like they everyone was a little bit worried back in March that there could potentially be some LP defaults or something along those lines, and it really didn't materialize. And so, for institutional LPs out there, I think they're really committed to the space.
Yeah, I mean, we've certainly had really good credit performance, not only on the subscription side, but also on the NAV side and the pref equity side. Our portfolios really survived the disruptions really, really well, which, is a credit both to the structuring that bankers like you do, but also to the liquidity management of both the investors and the funds.
Yeah, I couldn't agree more. It just speaks to the diversity of the market and the diversity of the LPs and their commitment to the space.
Yeah. Well, it's great to see you, man. I wish we were meeting in London next week for an in-person conference, but I'll catch you at the virtual conference.
Yeah, no, London, I'm definitely going to miss London. London is always a great event for the European community. It's great to see people. But virtual is going to be great. I'm very excited for it. The content, I've seen the agenda, I've seen the lineup. The content's going to be excellent. And it's very good for the practitioners in the space, to stay relevant with the content. So I'm looking forward to the virtual conference myself.
Yeah, I am too. And I'm also glad some of the folks on my team that, aren't able to travel to London are going to be able to attend because it's virtual. So, a little bit of pros in the greater cons for sure.
Yeah, no, that's a great point. The folks on my team, because it is virtual, and because, there's really not a spend involved or a heavy spend involved. You have to have a ticket to attend the virtual event, but no travel. And so for the junior folks on our team, this is a great opportunity for them to get a different perspective as well, to see the European market and how it may differ from the US market.
Yeah. Hey, Jeff, great to see you, man. I really appreciate you making time to chat with us. Look forward to being able to catch up with you in person here pretty soon.
Yeah, no, I can't wait. I really miss sort of the in-person, but until then, this will have to do.
Yeah. Well, thanks, man. Good to see you.
All right, good to see you, Mike. Take care.
Viewers, thanks for dialing in to Fund Finance Friday Industry Conversations. Have a great weekend.
The material and information contained in the podcast is for general informational purposes only. Any use of the audio within this podcast without the express consent of Cadwalader is prohibited. Quotes from this podcast may not be used without the express permission of the speaker.